All right, just do a quick follow-up on the yen, just because Aussie seems to be pretty much on the back foot. Again, if you look at these sort of things and you want to sort of say, okay, like is it Aussie strength? Is it sorry, well, in this case Aussie weakness, or is it yen strength, or is it a combination of the two? Look at a couple of the other Aussie pairs. So you can see this is Aussie dollar against the US, obviously moving down, so it's weak Aussie. We can tell on that. Another one you can look at is Euro Aussie. And in this case, it's euro against Aussie. So euro being the first one there, so strength, so moving up. So we're seeing weak Aussie there. So we can kind of tell that the weakness is coming from the Aussie side. All over. Wow, okay, I'll turn some of these alerts off very loud. You can tell that it's the Aussie weakness across the board. So yesterday I did a couple of the videos and that. This one, I think it was just this point here where I was sort of saying, hey, look, this is the line that they're trying. Oh, why is this not working? One second. All right, so just had to fix that up. Technical difficulty with well, not that. Anyway, point is, there's a thing to do with the charting software. Anyway, point is that we were saying sort of like it was bouncing back from this point over here. As you can see, it dribbled down. It's been dancing around this line, tops and bottoms with it all. Now, this is the thing. When you're on the lower time frames, you see a lot more of this chop. A lot more. It's a lot more sort of volatile ups and downs and all this kind of stuff. So that's why I suggest 4 hour or daily time frames, because although they have the chop, you can see it really sort of eliminates a lot of that sort of, oh, where are we going with it all? And the higher the time frame, the more significant the levels. So what we saw here yesterday, obviously tried to rally up, bang, and it's just been completely sold into at the moment. So this at the moment is currently showing what's called an engulfing sort of candle. So obviously sort of like, we've got a downward movement. It's tried to rally up, and then sellers are going, hey, look, I've got a good chance to sell this at a higher level again. Let me get out. Bang. And they push down and they're taking out that low. So you would expect this move at the moment to probably sort of continue down towards this 105 level. I think 105 is really going to be quite a crucial level, because if we have a look on the 4 hour here, and again, you can sort of drag these levels up and down, but you can see that like what I was showing on the 15-minute, they held it, they held it, they held it, they held it till they didn't. Pops through, comes down here. This is where they're going to take it to right now. So 105.12. It's only another 10 points or so. But that's where we're probably expecting. Because with that as well, you then have this rising trend. Get rid of this part over here. And you can see that sort of like we've got with the horizontals, we've got with this diagonal, how many times has it reacted off this line? And again, with this kind of stuff, you just got to assume that for the most part, it's going to continue to play along, as we've seen it in the past. So 1, 2, 3, came back here, touched, and it played along. So it doesn't mean that, look, nothing's ever, okay, it holds for sure, but this is the thing. You take your partial profits at these kind of levels, and you hold your core holding for it to move further. So what you would be doing now is, if you got in yesterday, like around this 105.60s or whatever, you would be moving your stop down. So this is where your stop would be now, above these highs, based on the idea that we can see a continued move down to the downside here. Once we do, if we do get through this zone here, this sell zone little mark that I've got here is basically sort of saying that this is where, if you wanted to add to the trade, that's where you could sort of put your, you could sort of add into the trade and add on to the next trade, because the next trade is going to follow this path here. And like we've seen with this sort of move back down here, and we'll see the reaction, we saw it on the 15-minute, most likely, if we get out, get below sort of, call it 104.90, but underneath 104.90, you're probably looking down to, there's little bits of support at 104.50s, but pretty much 104.40 is probably where you'll see price come to. And again, we'll see it most likely a reaction from there. And then we're looking for this third leg here. This is the one that'll sort of tell us, are we going to go further? Because this one here could effectively do that. I mean, it is possible that these things bounce back, and this is why you take profit at certain little points with it all. However, same sort of rules apply. You can see buyers held it here, buyers held it here, buyers held it here, buyers held it here, and then the buyers started pushing up, and so it moved away from this level. They started saying, hey, I'll pay a bit more. I'll pay a bit more, I'll pay a bit more, pay a bit more, and that's obviously what then pushes the price up over there. However, if we do get back down to here, all the people that thought it was such a great deal to buy it at 104.30, well, lucky days for them. They're obviously buying at 104.30 because they think it's going to 106, 110, so 110, whatever, that kind of sort of stuff. So if they get another option to buy at this level, most likely they're going to go, yeah, cool, I'll give it another shot. I thought it was a great deal here. Now maybe it's also worth a shot here as well. And as well, you'll get people that are shorting. As I said, you take profit at these levels. Both those factors, when you close a short position, you're actually buying the position to close it out. So that adds to buying pressure. You've got people here that were actually long and they were buying it. They'll be buying. So you will get a reaction should you come into this level over here. Obviously, we need to get through these lines first. But I would say most likely that's the course of action we'd be looking at. And then once we do get that bit of a bounce up here, we see how high this comes and when it comes back to this second level here. And see, you got to think about it like as an individual person, not necessarily collective. I mean, it is the collective, but if someone's like, okay, this is a great buy for whatever reason, they've done their analysis, they've got their team of research people, they say it's going to 110. So they're like, hey, look, we'll buy it here, we'll buy it here, we'll buy it here, buy it here. Comes back here and they buy it again. You get that reaction. If it quickly comes back to this level again, you might start to get sort of people thinking, hold on, wait, look, I think it's going to 110, but it's driven back down into this price here again. Do I want to buy it here again? And maybe they will. And then maybe it'll bounce and maybe it'll come down here again. Like I can get into the structure of this kind of stuff here. But eventually, whether it's one or two bounces through this point here, these people are going to go, the sellers are just too much. You know what? Let's just hold our horses, see what happens, and these buyers disappear. And when those buyers disappear, this move, oops, this move then pushes through and does that. And that's what will get you your breakdown. And then that's again when you look for where have we seen these levels previously before. Support and resistance are always the same level. It's not just a coincidence that this level here is the same level that they were selling at here. And so it means that when you come back here, you're going to get a reaction at these levels. So you have a lot of chop, up and down, up and down, up and down. But where you actually see price do a decent size pivot from, they're the levels we're looking for. And they're the ones that we look for to sort of say, hey, look, that's the 4-hour zone, support, resistance, whatever. We could just call it a zone, 4-hour zone. And we take profit on those zones. We don't short into those zones. We don't buy into those zones. We wait for the zone to break. And then we go, okay, well, what does that mean? It means that the zone's broken. Okay, that means there's an absence of buyers at this level. Like I just said, the buyers were there. They were holding it. They're holding it, holding it. And as soon as price breaks through, that's showing an absence of buyers there, absence of buyers there. And we go, okay, well, if that drops under, where most likely is it going to go? And this is probably more likely where we could be looking at next, 102 down over here. Now, obviously getting a little bit ahead of myself because it's, 105.20 up over here. But that's the general plan and structure that you want to see to be able to hold the move as it comes down. And as you do, as I said, so let's make this your stop loss. This is your stop loss line. As you go through and confirm each level moving down like this is how you'll trail your stop. So as it breaks down through here, your stop's still up here, breaks down here, maybe take a little bit of profit here, you get the bounce, you move down like this. When you break this level here, you then take your stop and you put it above that high there. And so basically what you're allowing price to do is make a new low, make a new high or bounce high, and then take out and make a new low again. And once it's made that second lower low, you trail the stop behind that structure. So this is like a well-renowned sort of method with it. You'll always give back a little bit because eventually it'll come up like this and clip, and so you'll end up giving back part of the trade. But at the same time, for the amount of time that you get onto it, if you look at this on a long way up here, so if you'd sort of followed this method here, so as in this is on the long way up, your stop's underneath the low. Goes up, pulls back, makes a new high. You move your stop from here to here. Goes up, makes a low, makes a new high. You move your stop from here to here. Pulls back, makes a new high, moves up. You put your stop from here to here. New high, pulls back. You put your stop from here to here. And as you can see, it's never come back and hit the stop because you're putting it underneath the pullback lows. So it needs to make a full lower low to actually stop and take you out. Though, as you can see, sort of with these bits here, makes a high here, pulls back, makes a low. That's where your stop will be, makes a high. This is where your stop will be. And so as you can see, the stop has like carried it all the way up the top over here. This again also is going to feed this move coming down here. So should you break these levels here, and we're looking in a short bias to move down like this, the people that were long, they've put their stops here, broke to a new high. Here's the pullback. They've either got stops here or they've got stops here. These levels that we've marked out. And these ones, this is what will feed the move that goes down, because as the price comes down and clips that, it's going to hit people's stop losses. So automatically sell their position, automatically adds to the downward pressure. Get a bounce, come, hit the stops under here, adds to the downward pressure and moves down and down like that. So again, look, it's a little bit of a sort of brief overview of like, structure and all that kind of stuff. But if you want me to go into sort of like actual levels, like prices, I mean, you can see them on the right over here. But if you want me to sort of mark out the actual levels, then yeah, I can do that, of course, a little bit more.